Jan Roll, welcome to Acquiring Minds.
Good afternoon, Will. Glad to be here.
Jan, we are talking at a moment of relative calm in your life as owner of a business that you bought, but it has been tumultuous getting here. We are going to hear the twists and turns and what you've learned along the way. Start us off, Jan. How was it that you set your eyes on buying a business in the first place?
Well, it kind of, to be honest, came out of the blue, to seriously consider buying a business. I think, like 5 years ago, my brother-in-law had introduced me to Biz Buy Sell, and I kind of went on there and looked at it and said, oh, this is pretty neat. You got to be crazy to do this, and then kind of moved on with my corporate job. Just a background, I've been 25 years in banking. I had worked up in New York for Merrill Lynch, lived through the financial crisis, lived through the failure of that bank, moved to Atlanta to work for Truist in 2014. And then, having lived through one merger when they got, when SunTrust and BB&T decided to merge, I kind of skipped over to SVB Bank and
SVB being
Silicon Valley Bank. So I had the pleasure of working for two failed banking institutions. And I think it was after going through that the second time, I actually did leave a year before that they had failed, but the stresses were already apparent by that time. I went back to Truist and just kind of felt like, rehashing old ground, going back to a company I'd already worked for. I didn't really have the energy. I really wasn't into it anymore. And actually, I was reintroduced to Biz Buy Sell because one of the managers who worked for me at SVB, when I left, said, hey, I'm going to do this. And he had gotten the Buy Then Build book, and we were just talking about it. And that's when I didn't really seriously consider it until I read that book and, kind of went down the rabbit hole learning about how to do it.
That's Dan, right?
That's Dan. Yep, Dan Burnside. Mm-hmm.
Dan Burnside, who may or may not appear in the seat one of these days, but you've connected me with him, so we're in touch. Okay, so how did you get serious about it now that it's kind of at least back on your radar?
Yeah, I mean, I guess from the small business standpoint, because, I'd always worked for S&P 500 companies, always big corporate bureaucracies. Somewhere around 2019, I started investing in real estate, created an LLC, figured out how to get the accounting done. And I started buying properties, doing the taxes, fixing them up. And it was really fun. I really enjoyed it. And so I felt like I had already kind of dipped my toe in at least the corporate structure part. And, that was just me and my wife kind of doing it on the side as, sort of, the gig economy. But, during COVID, we cashed out, all the equity in our home, and I bought like 5 more properties. So it actually had become, fairly substantial. We had 6 properties. So I kind of felt like why don't I felt like I had a little bit of experience from that. But obviously it wasn't, I had my experience with employee management from my corporate world. And then I had the experience on the real estate and in, fixing up properties from this LLC that I had created. And when I started looking at Biz Buy Sell, I kind of came across a home remodeling company in Atlanta, close to where I lived, big metro, Atlanta's growing. And, this was one of the things that really struck me of all of the things that I had looked at as this kind of dovetailed with my interests and, some limited experience I had on the real estate side.
So you were keeping your eye on Biz Buy Sell, but you were not what we would call like a full-time searcher, or were you?
I was not a full-time searcher. I'm trying to think. I think I had reached out to a couple brokers on a couple other instances, but it was really more to get my feet wet. I guess some in the literature kind of said don't wait too long. You could search for years and just look. And so, but this did come around pretty fast. So I think I was really started to seriously look on Biz Buy Sell and reach out to people and say October, November of 2022. And this one came across my desk in January 2023. So it was a fairly quick, find, and then kind of, full guns going down, signing the letter of intent and doing the due diligence, which happened in basically the first quarter of 2023.
But you were committed to buying a business in those months. So you were searching, if only part-time and still in corporate.
I think that I was not until I found this business, though, did it really kind of crystallize that, okay, I want to do this. In the beginning, it was like, but when I found this business, I was really excited about it. And then when I started going down the rabbit hole, convinced my wife that this was something that she also wanted to do as well. And, because it did involve, quitting, basically walking out of my corporate job. So.
Great. Okay. Well, that's a little bit unusual. Usually, I guess I'd say if I had to generalize, people decide they're going to buy a business no matter what it is. I mean, not no matter what it is, but it's less about finding a business that they kind of really turns them on and that they fall in love with, and more about just committing, okay, I'm going to go down this path. And then hopefully they do find a business that excites them. But in your case, it was you were kind of, what we might call a part-time light searcher. But it got real because you saw a listing that really got you excited. So you were really pulled along by the quick discovery of this we're going to hear about, Victoria Renovations. Victorian Renovations or Victoria?
Victoria Renovations, yeah.
I
would have probably searched for longer if I hadn't, come up with, so quickly found a business that I really liked.
Well, let's hear about that business. What other than your kind of interest in real estate, and what did you like so much about Victoria Renovations?
I think that other than kind of in an area that I was interested in and it had, some light experience, what really attracted to me the business was, as I got to meet the previous owner and talk to him, was just the organization and structure that he had put around it. Obviously, in a small business, you kind of expect things not to be written down, or there to be kind of like institutional knowledge that, it had with no formal structure around it. But he had project accounting, which is very difficult to do. Every project has, category, he did very in-depth where he attributed, people's time and all the invoicing to different categories, compared it back to, the original estimates. He had, one of the things that shocked me is that he had an employee handbook manual for a company with 10 employees. He had like a 40-page handbook. And so that was part of it that gave me the comfort that, okay, there's a little bit of rhyme to the reason, there's some structure to the business. And I obviously I'm coming away from a corporate bureaucracy. I didn't want bureaucracy, but it was good to know that, there were some guardrails that had already been created and structure in the company.
Yeah. Yeah. And how big was the company? Give us some data points, if you would.
Sure. Yeah. It was there's about 10 people, which was, 6 field staff, project managers that are on site, on people's homes running projects. And then, the sales and office staff was about 4 people. He had done $6 million in business, 2 consecutive years. I mean, those were, during COVID and with a 0% interest rate. So, that we'll get to, what translated after I bought the business. He had done about 60 projects a year, on average $100,000 a project. And, 2/3 of the business came from referrals, which was also a good sign that there was organic, just organic lead generation from the year. So, because, obviously I'm buying a business when we ultimately didn't have a lot of hard assets in the business. There were a couple, company vans, and there was some office equipment, but generally I'm buying the goodwill. I mean, on the balance sheet shows a giant number of goodwill. And so it was important that, the goodwill that you're buying is basically the future lead generation. What
does the company do exactly?
Sure. So we're doing residential remodels. So it could be, I think on the small end could be just a master bath remodel. That's probably the smallest that we would go. We have it was a 50,000 minimum, now 75,000 minimum. But generally they're larger remodels where we're doing a whole basement, we're doing an addition. Sometimes there's a whole house remodel where we're just gutting everything, replacing, everything except the core framing and adding on to it. So it's, kitchens, bathrooms, additions, and the like. And they run, the project sizes run on the low end 50 to 75, and on the high end as high as 800, 900,000.
So are you subbing out most of the actual construction? Because 6 field staff doesn't sound like a lot to be doing 60 projects a year.
Yeah. So yes, we so it's a question that we get asked from clients all of the time, which is so there are companies that will sub out, but they'll use different subs. So we've used the same subs And a lot of the subs have been with the company for 10 to 15 years, and they get a majority of their work from Victoria Renovations.
Mm-hmm.
And that allows us to kind of control the quality, and it gives us sort of leverage when something goes wrong that we can, bring back the company and that they'll fix it and do it right.
Mm-hmm. Mm-hmm.
So, our plumber has been with us for 15 years, does every single one of our jobs. And I think when you talk about the goodwill that I was purchasing, I was also purchasing these longstanding relationships and company practices and how we interact with these other companies. I mean, one of the things I think I underestimated is just how many different trades are involved in something like a home remodel. I have like 25 to 30 different, subcontractors. Some of them are core, like electrical and plumbing, framing. But some of them that could be, a little more ancillary. They can only come up with once, stucco repair or, things like that, which don't happen for every project. But yeah, so the field staff are basically there to interact with the client, manage the process as it relates to organizing the subcontractors, overseeing their work, and making sure that it meets our high standards for a renovation. And then, the field staff do, some of the internal, hanging doors, windows, trim carpentry is also done in-house. And we do build some cabinets as well.
Okay. And by managing the process, I hate to nitpick like this, but do you also mean managing the project? These are PMs essentially?
They're PMs.
Yeah. Okay. Right.
They're PMs.
Great. And so how profitable is a $6 million business doing renovations in the Atlanta market, residential renovations in the Atlanta market? Yeah.
So when I was looking at the financials, the flow through to the bottom line to the SDE, in the terminology of this audience, was about 20%. So there was about $1.2 million in SDE that the previous owner had done in, I think, the previous 2 years, and that was up, I think, a little bit from the pre-COVID, where he was doing about 4.5, but still was doing about 20%. I think one of the things that also attracted me to the business is when I looked at the accounting, the project by project accounting, there was very little deviation. It was basically making 35 to 40% gross on a project, and then 20 net of SG&A. After you pay payroll and expenses, went down to about 20%. So about 1.2 million.
When you say you liked that, what did you like about that?
Well,
that seemed...
I liked that it was proof that the process that he had put in as it relates to estimating and then tracking the actual expenses against the estimates, that it was very precise, and I think any project can have hundreds of line items of work that we're doing. And I think I learned after the fact that there's a lot of opportunity to misestimate what something's going to cost. But there was a pretty good mousetrap in place to make sure that those mistakes were limited. Yeah.
Jan, one of the things so this is a construction business, pure construction, really.
Yep.
And we are often worried about the quality of revenue in such a business. Highly cyclical, among other reasons. And you already kind of touched on that by noting the low interest rates when you bought the business, and that he had really, really strong years as a consequence of that. Interest rates are now quite a bit higher. How did you think about, and of course it's project-based, so the predictability of the revenue isn't what it could be, although it sounds like this business is so established and you have such strong lead flow that there's probably some predictability to it or some consistency to it year over year. Anyway, address that quality of revenue in a residential construction business.
Yeah, well, so I guess there was twofold. One was what was the margin of safety that I had when I bought the business. So when I had kind of run the financials, and that part, in banking, doing financial modeling is something that I'm experienced at. I basically said, hey, this business can go down by 1/3. And even with the 90% SBA loan that I took out to buy the business, that, we could still, chin the bar. And then it was also just the quality of the referral network, and also of the website. So the website for this business was hands better than anything else that I had seen locally at competitors. Like, we basically, after any client who wants professional photos done of their remodel, we'll pay a professional photographer to go take photos, and then we'll put it on the website. So there are hundreds of basements on there, and they're all super high quality. And so, there was proof in the pudding that, I could, as a consumer, I was attracted to the website. And then, it was also proof of the financials. And the other thing that kind of came out during the due diligence phase was just how much business the seller was kind of turning away. It was too far for him. An addition requires, a lot of in the permitting side and can be a little more complicated. And, obviously, somebody who's been doing it for 25 years, who's now looking to move on, is not going to be as engaged as I am as a new owner who first coming in. So there was also that instance of, the thorny deals or a client that he felt, there were some times where, it was just that client is going to be a pain. So I'm just not going. I'm going to price this one really high because I don't want the business. And so it did, on the face of it, look like he had more business than he could handle.
Great. So demand is in evidence, and you're feeling like with your new energy as a new hungry owner that you can take some of those jobs and quickly grow revenue.
Yeah, but again, I had done in the literature. I did understand that buying a project-based business comes with its risks. I will say, and there are structural reasons, post-COVID, interest rates going up, election year, which was like basically last year. But those are all headwinds that we had experienced in that, I would say my first year owning the business. But the deal flow still came through. There were still a lot of meetings. It certainly picked up substantially in the last 6 months. And so I will say that the strength of the referrals and of the past projects has borne out. It's amazing. There are some cul-de-sacs where we've done, five basements in a cul-de-sac because of the strength of the referral.
Wow.
And also, just this industry, there is a significant lack of trust that a client has with a contractor. You hear a lot of horror stories.
Yep.
My contractor was here for a year, and so one of the things I've brought to the business is a little bit more transparency. And but in spite of that, I'm still sometimes shocked about the level of distrust sometimes between a client and a contractor. And I have a saying now where I tell a client, when they're kind of becoming, sort of torn up in their head, that I'm still getting used to the lack of trust in this business, and that's basically me telling them that, chill out, we're going to take care of it, and we're going to make right. So.
Well, it as an example of that, I feel that way about contractors, not you, of course, Jan, but I have that reflex as well. Having gone through my own experiences, it does seem kind of universal. One of the other things we hear about, Jan, in construction land is for the service providers, the not favorable cash conversion cycle. Now, often we're hearing that from a trades business or a sub, where they'll have to do the work and then they don't get paid from the GC until 60 days later. But as you're the GC, and you're the one, and you're the one who actually gets their hands on the money from the end customer. So does that mean that your cash conversion looks a lot better than other service providers up and down the construction value chain?
Well, I can't speak to what other cash conversions look like, but I will say that one of the first things when I was working alongside the owner post acquisition was, he really stressed that 24 hours to 48 hours after we received an invoice from a subcontractor that we would pay it. And I continued that practice. And basically this kind of goes into the strength of the relationship between our company and our subcontractors. So we pay immediately. So there is, I guess, a little bit of, it's something that I'm feeling now as we've been growing. There is a little bit of a lag sometimes between when we're paying our subcontractors and when I'm receiving the money from the client. Little things that I've done is we used to take 10% up front at contract signing. So I kind of moved at that 20%. So hadn't had any pushback from clients, just kind of moving up a little bit of the cash flows earlier in the process to kind of account for, when the money goes out. But generally, the money's going out before it's coming in. And that's just, I think, part of the business. I've constantly calling my credit card company looking to get raises in my credit limit because I actually have to pay it intra-month, sometimes 2 to 3 times a month because of just how much volume is going through the credit card. And again, just established the business, so there's a very limited track record, and they're a little hesitant to raise it. But I think I'm up at like 150,000 on my credit card, but I still have to pay it off intra-month just based on the volume that comes through.
And so just to understand your cash collections, if you do a $100,000 job for a homeowner, they pay you now $20,000 at signing. And then how is the rest of that $80,000 paid to you?
Yeah, so it's basically progress payments. So generally it's 20% at signing, 20% after rough-ins, which is, mechanical, electrical, plumbing, and then, inspection. The city or county will come out and inspect. And then, it's basically structured to, after we've finished a stage, then it would be drywall, cabinets, trim, then it'll be flooring and painting. And then, so it's generally like, 20, 20, 20, 15, 5. So we leave out 5%. Just to kind of, until we're totally wrapped up, finished everything. I think most clients just feel more comfortable having, a final payment out there. And one of, and that's just something I've also learned is to just let that one sit out there for as long as possible and not try to collect on it. It's only 5%. Let's get them post project, let them look at everything that has completed. I mean, we provide a 1-year warranty and we will always come back out, but it just gives, the clients a little more comfort to know that, that there's a little payment out there. So,
like I said, been there on the other side.
Well, when you figure out how to, I can't change a whole industry, but, coming from a trust business like banking into a, I guess a little different type of business, that part has been a big adjustment for me just to, the only way that we can engender trust other than the referral is just, in our responses, in our communication, in our preparation. And so there was a lot of that. One of the things that the previous owner did is he had a packet when we show up at the door for a client, and it has our insurance, it has our general contractor's license, it has references, and it has like and it's just kind of showing everybody, that we are a professional organization. We're not just two guys in a pickup truck. I actually created like a document after we give an estimate. We'll provide the background. It's document. Okay, here's where you're at, and here's what happens next with things like the process, the timing, things to be aware of. And I think that's been well received as well.
Yeah, well, it's one of these where the poor reputation of the industry can serve you as newcomer well because the bar is low. And you can really differentiate yourself from your competition pretty well by doing some of these kind of tactics, for lack of a better word, that you're doing. Also, some nice business buyer fit for you, Jan, that you're coming from an industry where trust is such a big deal. And so you can just kind of bring that with you into an industry where that's lacking and kind of, again, differentiate. And it comes very naturally to you.
Yeah, 100%. And that also goes towards employee management. I mean, the other idea is that the construction worker, I think, is a little more like I've worked here, I've worked there, just trying to build a culture. Culture is sort of a buzzword in the corporate world, but a culture where people feel comfortable speaking their mind, but also, having relationships at work. There is just, it is a different type of employee. I mean, the common thing I heard when somebody told me they were leaving is, I know I should have give you 2 weeks, but but for the people that we have now on staff, I think everybody appreciates that, it's a little more like a help each other out type of culture, and, trying to build a company to have people stay for long periods of time.
Yeah. Great, Jan. Well, what I want to do is have you tell us where you are now. So you closed in July 23. We're now, what is that, 21 months later?
Generally,
And you are, where is the business versus where you bought it? Kind of take us, and then we're going to work backwards.
Sure. So you're talking about financially? Where's the business financially?
And financially and other indicators of health.
Yeah. Well, I mean, so, generally, if you think about it, there was $6 million business. A project on average takes about 3 months. And, in our sort of pipeline, you always want to have $1 million in booked business as a minimum, which is basically kind of, and in the beginning, I think when I took it over, there was about $1.5 million in booked business. 2024 was a slow year, and so that did go under the million at one point. But actually, as of now, I have 2.75 million in booked business. So that's business that we're going to be doing over the next 3 to 5 months. Some of them are bigger projects, so they'll be longer than 3 months. But the first year I was at 4.5. So it was a significant dip. And again, for the reasons I said before, which was, obviously there's transition. So there's, strain, bringing on new people. There was, election year, and then just interest rates being high. I kind of purchased the business right before the last rate hike kind of hit in.
Yeah. Well, that would say 25% dip from 6 down to 4.5.
It was,
and your
my threshold was 1/3.
It was 33%. So you were maybe getting a little uncomfortably close to that.
It was a little stressful in the beginning. I never had to dip into savings or anything like that. I had a line of credit, so I got a loan through Customers Bank in Pennsylvania. They had offered me a fixed rate interest loan, and with a banking background, I kind of like the idea of a fixed rate loan versus, which I think is unusual in the SBA loan business. But they were good to work with, favorable terms. I have a line of credit that I've had to dip in with occasionally just to meet working capital needs. But again, as we said, it's more a timing issue than a solvency issue. It was like, hey, we got to have a lot of outflows. I think I probably dipped into it 3 times over the last 21 months, and then paid it back probably within the next 30 to 45 days.
Okay. And then back to where you are today. So booked revenue or booked business jobs are looking extremely strong for the next, 3 to 9 months.
Yep.
And revenue is back up to 6 million-ish.
I'm on a fiscal year June. So I'll probably be north of 5, but from a trailing 12 months, or for a calendar 2025, I'm expecting to be back at the 6 million. Yes.
Okay, great. And all of the problems that we're about to hear about have mostly settled. You're never totally out of the woods, but you're feeling stronger now than you have for the last 21-ish months.
Yeah. I think, you and I had initial conversations about, part of my, in deciding to buy this business was listening to this podcast. And I really enjoyed the variety of perspectives and context. I think sometimes the online literature can be repetitive. And so, you and I had a conversation early on, but I decided to wait until we had overcome some of the problems so I could give a more contextual answer to, some of the obstacles. So, So here we are.
Great. Okay. Well, that's where we're going. So this has I don't want to call it a happy ending, but we're working toward, stability. That's where you are today. Let's now unpack some of these 21 months because there was a lot and you have a lot to share that others might learn from. I guess start with the loan. How are you going to structure the acquisition of this $6 million construction business?
Sure. Yep. So basically, I was going to use my 401k. So a majority of the deposit, it was a purchase of $4 million. And, $400,000 came from my 401k in a Rob's transaction with Guidant Financial. And then I put in $50,000 personally. And then I had a partner, a former partner, who also put in $50,000 personally. So it was 80% Rob's through the 401k, 10% personally with 10% from my partner. And then an SBA loan for the balance.
No seller note.
There was no seller note. No. There was no seller note. There was an agreement to have the seller work in the business for a period of time afterwards. And now I'm reaching back into my memory, and I know that the law had changed right around when I was contemplating the transaction, which is summer of 23. I believe the law changed where the SBA now allows seller notes. But when I first initiated this, it wasn't allowed to get an SBA loan with a seller note.
I think what I feel like you're talking about is the change in the summer of 23 to enable partial buyouts. So your seller could actually retain some equity going forward. I didn't think it was about seller notes because I thought seller notes have been as long as I've been talking about this.
Well, then there was no seller note. Obviously, you probably know more about this than I do, but
okay. Well, somebody will Correct me if I got that completely wrong. Either way, no seller note. And did you and you? So the answer is to the reason you didn't get one because you thought you couldn't, or you were informed that basically you couldn't.
Gosh,
and I'm only pressing
because
it is quite a standard instrument.
Yeah. I mean, is it because I didn't think I could, or that just wasn't something that the seller was looking to accept? I can't recall exactly why there wasn't a seller note. It didn't, because we're only talking about like a 3.5 multiple on SDE. The bank wasn't requiring it at the time.
Okay.
So.
Well, and 3.5 on a business that has more than $1 million in SDE is a really strong multiple. And that may also be, I think you pointed this out to me in the pre-call, that may be capture or reflective of the quality of revenue because it is project-based revenue. Yep. Then if this had been more recurring or reoccurring in nature, that multiple might have been higher. So that's works out. You pay a little bit less for revenue that is a little less consistent. Although if you have a great business, hopefully it is consistent. Okay, so the licensing. This is where you're kind of the first big stumble, was it not?
The licensing was where we, and this is one of the reasons why when we were doing the due diligence in the first quarter of 2023 and we didn't actually get the transaction closed until July, was sort of the bank sort of bringing it up early, but saying it, we shouldn't have a problem. And then we were originally going to close May or June. And I think the bank kind of came back and said, we need somebody to have a license before we're going to allow this close to happen. After I told the whole story, like I fully understand why the bank now does this, because the licensing. Well, because acquiring the license is going through the government authorities to acquire the license is not. There's really no way of quickening the process, and I think we hit a patch with the state of Georgia where there was some dysfunction in the Secretary of State's office because we did hire a third party to help us shepherd through the licensing process, and they work in all 50 states. And so it really took it took over a year for us to secure the license, and that's just caused a lot of unnecessary stress and strain on the company. And generally, it was anytime that anytime you submit something to the Secretary of State, they have 45 business days to respond. And then we learned, it was 30 days. Then we learned it's 30 business days. And then we learned that for them, a business day is Tuesday through Friday. It's not even Monday. So you're talking about, so it was like, anytime we would make a submission, they wouldn't even talk to us until, these 30 4-day business weeks would transpire, which is like, 2 months plus. And then they would come back and ask for more information. And then after like 6 months went by, they were like, well, now you have to resubmit because certain things are outdated. And it was one of the more frustrating experiences I've ever had. I mean, I went as far as found the Zoom link to the monthly general contractor licensing board meeting and joined. And I think I
said some words.
I was stern, but I kept my cool, but it was just kind of, I do think it was a systemic issue that they were having. Obviously Atlanta's booming and there's a lot, but at least the feedback I'd gotten from the third party licensing company was that, this was very unusual in all the other states, things weren't dragging on this long. So hopefully they fixed it by now.
And so when the SBA lender, so going back to pre-transaction, when your lender comes back and says, oh no, actually we do want this to be addressed. How did you address it at that point?
Well, at that point, it actually got to the point where the deal was going to fall through over it, because, you can't quicken that process, and I think it wasn't until we basically were going to walk away that the bank came back and got some sort of concession from the SBA. I'm not really sure. Obviously, this was happening within the bank itself, but they were put in a bind. Like I did start looking at other banks at one point to see, if I could get the transaction closed with a different bank that wasn't going to require us to have the license, prior. Now, again, part of the purchase transaction was seller was going to stay on and we were going to use his license for the first year.
Yeah. So you had this license, but your SBA lender got spooked about the seller when the seller was going to inevitably leave, and then who was going to have the license. Okay.
Yeah.
Okay. And so the answer was basically you just kind of pushed back on it, and we're going to walk from the deal. And your lender said, "Okay, no, it's okay, it's fine."
Basically, although that took a couple months.
Yeah. Okay.
So, and also, the seller's broker who worked with, I can't remember the name of the firm, but it was a pretty reputable business brokerage firm, was also, applying their wisdom and context and pressure as to like, why are you not approving this loan? But, in retrospect, I do understand, because it had taken us so long to get the license, why this is a requirement. We did manage to get through it, but it just having that hanging out in the background was, was a stressful period.
And so to get the license, the individual now licenses you?
No, it's not me, actually. I mean, I have plans to get my license, but I have someone in the business who's, 25 years in construction. And, obviously the part of the licensing is that you have to have 2 years experience in the field. And so I couldn't get that until, I think I'm probably coming up on crossing that. But I do intend to sit for my license. But basically I have a licensed general contractor who basically is a qualifying agent for the business.
Okay. Tell me about this partner.
Well,
deep sigh.
So I somebody from my personal network, who I liked a lot and had been in the construction field up in New York, originally from New Jersey, had personal connections through my wife. I think they went to college together, friends of friends. He had moved down into Atlanta during COVID, and we kind of went out socially. And I had already kind of, found, this company and was going to purchase it. And I, obviously with his background, I approached him and I said, are you interested in, joining me in this endeavor? And he was, and, we kind of created a, stockholder agreement. This is where, I was the one that was taking the full, brunt of the personal guarantee on the loan. So it was like my 401k, my personal guarantee. He was, wasn't tied into the liabilities in any way. And that's why I kind of said, I need you to have like an equity component. I need you to have some skin in the game, for the company. Now, I guess, liking somebody socially and then somebody having a background in a new endeavor that you're doing are actually positives. But I had not actually worked with the gentleman before. And obviously I think there are, and I don't want to speak too negatively, but let's just say that after we purchased the business and we had our different defined roles, it became pretty apparent to me that it wasn't going to work out with him in the business. And so basically after 3 months in the business, I did wind up letting him go from the business, without getting into too many details. I just didn't see a path forward. There was just some unhappy clients, unhappy employees.
And what was his role or his title?
His role was basically to run the field operations teams. And he was a minority equity holder in the company.
And so how do you claw back your equity?
Well, so there was, we actually had a formal agreement that we had a stockholder agreement, and there was an automatic clawback if there was termination within the first 2 years. And I mean, what did wind up happening is this is, I guess, some of my advice for, future entrepreneurs. I had a lawyer who was going to do our purchase agreement, and it was a flat fee, and I thought it was a very, attractive fee. And then, during the process, I said, hey, can you also do my stockholder agreement between me and my partner? And he did. Fast forward, what happened is we didn't have a separate employment agreement. And so there were some ambiguous terms in the stockholder agreement related to employment. And after I, kind of terminated my relationship with the partner, he did wind up coming back and filing suit against me. And then in the discussions with the lawyer post, that suit, what came out to me was, you sort of have some ambiguity in some of your legal documents because you didn't have a separate employment agreement.
So tip there would be what? Get a better lawyer.
I guess I
have
was
an
trying to
employment
save a nickel.
agreement.
That you should, yeah. So not to. Well, I probably should have had an employment lawyer draft an employment agreement, separate from the stockholder agreement. Yes.
Okay.
So.
And I know you don't want to get into it too deeply, but it is a key feature of this story. How bad did this litigation get?
Well, I mean, the thing is, there's a lot to do when you take over a new business. There's a lot to learn. And having a lawsuit is the first time I've ever been, in a lawsuit before. It just, it took a lot of money and it took a lot of time. And, basically we went through mediation. And I think that the thing that, obviously I can understand that and I can empathize with he being upset about the situation. But, you sue a company, there was nothing to get, right? I mean, we were a giant loan. So, so we tried to work it out in mediation and it failed in mediation. And then we went through discovery and then I think we went through discovery and turned over all the emails and documents, and he realized that there's no incriminating evidence of me conspiring with the former seller. It was interesting. I think he was actually more angry at the former seller than he was at me. He thought we were in cahoots together, but it was really just a reflection on performance as to why we had to terminate. But I think sometimes the ego doesn't want to accept that. And so he was looking for ulterior reasons. But once we went through discovery and I turned over all the emails and all the text messages, and I advise anybody that you don't want to go through this process because trying to figure out how to put all your text into a PDF was a day's job alone. I think that, and we just went, back to a private negotiation and we settled. So.
Okay.
So overall, it probably cost me $120,000 to settle the lawsuit between lawyer fees, half in lawyer fees, half in a severance.
Yeah. So. And that 120 comes out of the business.
Comes out
of
the business.
Yeah. Mm-hmm. Yeah. And of course, what it also cost you in opportunity cost of attention. I mean, this really consumes your attention at one of the most times where your attention is most needed in the learning and the transition. I mean, it really is. We talk about it often in some of the legal webinars the legal office hours that we host. You do as much as you can to protect yourself in the legal docs, but you really just don't want to get into a lawsuit. I think everybody already knows that. They're extremely costly first, but particularly in this context, if they're likely to happen, they're likely to happen in the first year or two of your ownership, precisely when you're going to be drowning in the learning curve as it is.
Yeah.
So you just can't afford, attention-wise, another giant distraction like that. But you did. You pushed through.
I think I worked
more
than half of weekends in the first year. I was definitely working both Saturday and Sunday. So,
and I gotta ask, was this awkward for your wife and her social network?
No, not yet. No, I don't think so.
Okay.
I mean, luckily, I've been trying to leave it on as good terms as possible, but we're not necessarily in that close of circles, although our children do go to the same school. So.
Oh, okay. Bumping into each other at a PTA meeting sort of thing.
Yeah.
Jan, and what is the takeaway here, the learning, if anything? How could you have this is, I don't want to call it a diligence miss, although maybe that it's as simple as that. How do you react how do you reflect on it?
I guess there's a couple things. I thought that having a partner with experience in a field of which I did not have enough background in was going to outweigh the drawbacks of really not having a good handle on, who this person was as, in their field and as a worker,
professional.
Yeah. And so I guess the takeaway is that, anytime you're going to get into a partnership, I would only do it. And, with somebody that I've known well and I've worked alongside for a long period of time. So I think that, that was a diligence miss.
Jan, or is it not doing, or simply, there's just in the pre-call we talked about how could you have really diligenced this person's professional character? Maybe you could have in the same way you would employ professional references or something.
I did ask for references, and I actually spoke to one of his references who had great things to say about him. I think that, he did come from a commercial residential background and not a residential, I don't know if that, maybe I couldn't gauge that the transfer would be difficult, but really what it came down to is, he had an employee mindset, not an owner mindset. And, he, just was making a mess of things,
Okay.
And it was like, you don't, I think anyone who's been a manager, it's like, how much time am I investing in people to get back some time for things that I don't have to do? Yeah. And it was just, like, hey, we're not getting anything done and investing a lot of time. And that's the last thing that I need from a partner.
Yeah. Yeah. Well, one of my horror story interviews a few months ago was a similar thing where the acquisition entrepreneur partnered with somebody that he'd met through his church. So not exactly a social network, but sort of. And it ended up being just a horrible disaster. And in fact, the reason for the collapse of everything. And so the question is, I guess, is it a diligence miss, or there's just too much risk in taking on a partner that you just don't know well to begin with?
Well, I would say, and this is why, because I think some people may be saying, it was 12 weeks until I had decided. You're taking on a lot. I mean, you are taking on a lot of risk in an opaque situation when you're buying a small business like this. And as you know, we talked about Dan. I have another friend who was on this podcast. All three of us sort of did this acquisition in a 6 month. One of the things that there's no amount of due diligence. You are taking a little bit of leap of faith because there's no amount of due diligence that's going to give you the full picture.
Sure.
And so then you're adding, so you're already taking a lot of risk and you're putting a lot of faith in a business. And then to do that again with a partner that you don't know, it's like how many, you only need one of these things to go wrong for things to go belly up. So I guess, hey, if 10 years from now I want to take on a partner, it's going to be a lot different of a situation than if I'm, doing it at the outset. And so I would just be mindful of how many unknowns and how many risks you're taking as you set up your deal.
Yeah. Great. Thank you, Jan. Employee turnover. Unrelated to the partner, not including the partner, others now, right? Yeah. There's been some turnover, has there not? Tell us about that.
There has been some turnover. Well, we had, I think that the business was on the market for probably a full 18 months before I purchased it. So, I guess by the time I started talking with the seller, it had been almost a year that he was trying to, that he had it to be sold. I think it became apparent after the fact that there were some promises made to some employees to kind of keep them there. Because once I purchased the business, I think, I actually did what I was supposed to do. We had meetings with everybody. We sat down. I did formal retention letters for people. It's like, hey, look, if you're here in the business through, a year, like there'll be a bonus payout, and I put it in writing and all that. But I think, and this comes I'm very understanding of where the employee mindset would be as somebody who has lived through multiple financial mergers. I've been in that situation where, a new company bought our company. Bank of America bought Merrill Lynch in the height of the financial crisis. And I was just like, you know what? I don't want to work here anymore. That's how I felt. And I left. And looking back, it was probably a mistake. But that was in my mind. And I don't fault the handful of employees that just sort of felt that way. Just didn't want to go through the emotional turmoil of, I got to learn a new boss. I've got to deal with this. And obviously, anybody who's worked a job for an extensive period of time, I used to have this saying, it's like the longer you're out of place, you start to see the cracks in the walls. Like when you go into a new company, everything is shiny and new people, and it's friendly. And then, by the time, and then when you leave a place and you go to another place and you start to see those cracks, you look back and say, well, those cracks weren't as big, but they all have cracks. So I think, some of the employees had been around for a long time. And just, I think in retrospect, they just didn't, they wanted, I guess, to, in the same way I did with the Bank of America Merrill merger, you wanted to choose your own fate. If I got to have a new boss, let me be the boss of my choosing versus one that's foisted upon me. So, I think there were a couple, we had a project manager who left within the first month. We had an office employee who left like right before the transaction closed. And then, those were ones that were, those that didn't want to, come along with the transaction. But then there were some people who closed the business. I'm in at 6:30. The seller's in at 6:30 with me. We're like, hey, we're going to do knowledge transfer. And within the first month, he's like, this person you should fire. And I'm like, wait a minute. You've had this guy on your payroll for 3 years and you're telling me he's now a low performer. So to his credit, I think irrespective of what had happened in the past, he was giving me the sound advice to say, yes, I may have kept this person around. I was selling the business, but there are some deficiencies in this person that, we cannot accept. So,
okay. So let me unpack a few things there. So first things first, some of the turnover that you experienced, there's really nothing necessarily to be learned from it. It's just, there's always going to be some employees who use it as a prompt to leave.
My experience, I would say both the corporate experience and the small business experience is that it's an emotional time and you should expect some employees to leave.
Okay.
Yes.
Yeah. Okay.
Yeah.
And then there were some low performers that you were given the in no uncertain terms recommendation from the seller who could have done this dirty work himself that you should let them go. So you absorb that, you do that.
Yeah.
And then the thing about the retention bonuses, and I heard you say before the that you were basically having interactions with employees pre-close.
Well,
did I hear that correctly?
I wanted to have interactions with employees pre-close, but it was like a firm no from, the seller, also advised by the business broker that you can't talk to employees before the close. And so, actually this was one thing where I insisted on meeting, the office person who left. We did have a lunch and, because, I'm an office person, I'm not a field person. And so I wanted to make sure that at least, we had a conversation, we had a lunch and it went fine. And, that person had been in the business for 12 years, worked side by side with the seller and, did wind up being one of the people that, left, right before we were going to close the business. And it was all for personal reasons. I feel like, in spite, we didn't actually have the lunch until very close to the end. I felt like she felt like a partial owner of the business with the seller. The seller didn't see it that way. We waited to the end to tell her. She had some. She doesn't talk to the seller anymore after basically working in his home for 12 years. She just felt like that the way the transaction down, not from our point of view, but from the seller's point of view,
Gotcha.
wasn't above board enough. And so again, I don't know what else I could have done. You don't know. There's no way you're going to peer into what a 12-year relationship looks like. At a lunch. So.
Okay, Jan, the head of sales, remind me, we glanced off that in the pre-call, but that is a feature of these last 21 months as well.
Well, yeah. Well, so, the head of sales, originally, the seller was the head of sales. And then my partner was going to be, head of sales. And then I think I hired another person to be head of sales head of sales has to be kind of like you wake up in the morning and you want to get on the phone and talk to clients. Well, that's not true. I have worked in sales roles, but I did realize that I'm not a salesperson. I kind of gravitated toward the project management, product management side of in my corporate life. But I worked with salespeople all the time, and I know exactly what a salesperson is. It's a person who can't stop talking. It gets energized by meeting new people. And so we did wind up hiring somebody, again, 30 years in the business, general contractor. But again, apparent within, I think I wound up letting him go within 30 days. I'd never had to make decisions this quickly on things like employees, but given that there is no room for error in a business where you have a 90% loan, it's either like you cut it or you don't, right? There's no, the other thing to note is, there's nowhere to hide in a small business if you're not doing the work. And I think in a corporate world, there are some people who are good at their jobs, but are just kind of doing the bare minimum. Like there isn't enough extra capacity for somebody to not be pulling their weight.
Yeah.
So there was this, for a period of time, I was actually doing the sales with the prior owner, but I needed to find a head salesperson, and I did wind up promoting somebody from within the business, somebody who was a project manager, who had sort of the proactiveness, go-getter, like always offering his opinions, like say, I'll do whatever it takes. Basically, he's been a godsend for me. But he leads the whole, he's also the one that, has the construction license and who does the sales.
Mm-hmm.
Yep. But again, that was, that's a key role in the business is the lead generation and sales.
Jan, we're talking about all of this stuff in because it's in the rearview mirror, I guess. You're quite relaxed about just kind of relaying it. How bad did it get? How gray did your hair turn? Because I don't see any gray.
Well, I think
you seem pretty chill right now.
Well, you know what? Even those that are in the business, I think even when I was in a stressful time, I don't show the stress. My wife sees it in eating and drinking at home, but I generally one of the things that got me to the point of buying this business is that I had faced some very large challenges in my corporate life. And and at the end, I got fairly senior as a managing director at a bank. And, I became kind of a fixer where something would be on fire. The manager, a peer of mine would go to my boss and say, I don't want to be a manager anymore. And people are leaving. And he would be like, okay, you're now in charge of this. And it would be areas that I didn't have any experience in. And so, you do a couple of those kind of turnaround projects within a corporate structure, and you're kind of like, okay, I can handle. The way I describe it is like, I'm in a dark room and I don't know where the walls are. That's kind of where you start, and then eventually you search around and you can feel the walls, but it's still dark, but you feel a little better, and then over time, the lights start coming on. And so if you go through a couple of those experiences, you kind of learn just how to approach the problem, and some of it is having the right people around you or the right areas to get the information. Now, when you're in a corporate structure, there's all these matrix. Hey, there's an accounting, there's a compliance team, there's a sales team, there's a product team, a treasury team. In the small business, those people for me are my subcontractors and my vendors. And so, the beginning, while you're learning, you kind of feel shy. It's like, well, I don't want to bug them because I'm going to show how much I don't know. But that quickly goes away, and I've actually moved. Certain vendors, I tell a new vendor now, hey, I'm 21 months into this business. I don't come from a construction background. I have business to give you, but my requirements are you're going to have to answer some questions. I ask a lot of questions, and you know what? There are plenty of people who are willing to do that, and there are some people who don't want to do that, and that is sort of like my knowledge network. So it allows me to, when I come across a situation that I don't know the answer to, I can leverage that sort of network of companies that we work with.
So takeaways there would be, well, first of all, you just had this nicely applicable experience of being kind of doing internal turning around a few times. So you've built a muscle in navigating unfamiliar terrain,
which I do think,
and absorbing, I guess, drama and hardship in a business setting.
Able to live, being able to work in an ambiguous environment where there are no clear answers. I would say, if you're coming from a corporate world looking to do this, you should reflect upon how have I been put in those situations, and how did I feel? Did I enjoy being those situations, and was I successful in those situations? Because this is one giant ambiguous ball of figure it out.
Yeah, it's a giant ambiguous ball of figure it out. Thank you for the headline for this episode. And then the other thing, of course, was having the humility or not overthinking how you'll be perceived if you just ask questions up and down the value chain to your customers and to your vendors, actually.
Yeah.
Now, do you not to your customers, but to your vendors and to your subs?
Yeah.
Sorry, I guess your subs are your vendors. Yeah.
Yeah.
I just want to hear a couple of other. I want to hear Robs, if you have anything to say about Robs, which is an instrument that we hear about from time to time, people are very interested in. Of course, I want to also hear about the marketing and SEO, which has been a big happy lever in the right direction.
Yep.
But anything on the emotional content of your story or the drama that we haven't touched on yet?
The one thing I can't stress enough is sort of like, there's no amount of due diligence that you're going to do in a small business that's going to give you the full picture. And that is why they're priced the way that they are priced. And so at the end of the day, it is a bit of a leap of faith. And you're going, and you're, I think I kind of latched onto like, hey, there was structure in the business, there's process. And that did turn out to be true. But, you don't know about employee relationships, and you don't know about all the vendor relationships. And, you're not until you're actually in a business. You can see the financials. And I would say, coming from a banking background, the financial due diligence was probably the least sort of illuminating, because, numbers are numbers and they don't always tell the story. So I would say, so if I was going to go back and I would say I should have negotiated harder on price, because when you're going into these transactions, you're excited, super excited. I mean, couldn't stop thinking about it and talking to the two other entrepreneurs, and you want to glaze over what little flaws that you see, and want to justify the price that the seller wants. And every seller is like hard line on their price, but I would have negotiated harder on the price. And I would have probably demanded more contact with the employees prior to selling, right? Because if you're going to put all the money on the line, you got to go. You got to have the margin of safety as it relates to price, and in the due diligence, having a little bit of window and direct contact with the employees, I think would have been key.
And so, to be clear, you would have, in retrospect, pushed harder on price because to give yourself a little bit more room for things to go badly, because you were overestimating what you knew about the business. And I wasn't
overestimating what I knew about the business. I was overestimating that again, as I said, I was overestimating that you're going to be able to hit the ground running and the business is going to run. Now, maybe this be because I picked a project-based business versus annuity type business. And one of my friends who bought the business, he bought an HVAC business. That's one of my 30 trades that I have to learn, right? I mean, we have an HVAC, and so, and I think, and maybe this particular business has such a wide breadth of knowledge that I needed to scale. It actually works well for me because I like to learn and it engages me every day, but it made it harder in the beginning because there was just too much to learn. But yes, I would say that you don't know what you don't know, and that's why the pricing is the way that it's at, and that you want to actually have a little bit more margin of safety than just in case.
Great. Robs, anything to say about your Robs experience? Something you recommend? Of course, you went with Guidance. That's the big name and is the big Robs vendor out there.
I mean, it got the job done, right? I got the money out of the 401k. I got it into the business. There's a little bit of administrative burden that comes with it. It's not necessarily an intuitive process to kind of go through. Guidance is a good partner. Not that I have any other experience, but I didn't have a bad experience with Guidance. I just think that it's, it's a very technical, because you're talking about the ERISA laws and, just opening up other bank accounts and moving the money and getting through those hoops, it's kind of a chore. But other than that, I mean, hey, like if you don't have $500,000 laying around except in your 401k, like you kind of, it is an option where there are no other options. And so, I would certainly say that if that is your only option, don't shy away from doing a Robs transaction, because, it does work. It's just, there's just an administrative burden that comes with it upfront when you're trying to move the money around, and then on an ongoing basis, running, you have to run a 401k for the company and offer it for the clients. Now, I will say one thing that I've learned, and I'm going to give that, since I'm a banker at heart, this is not tax advice. Please consult your professional. But in the 2017 tax reform that Trump did under his first administration, there was a new concept called small business qualified stock, and it only applies to C Corp stock, and you are required with a ROBS to have C Corp stock. So I have a C Corp stock, but in that law, small business qualified stock basically says that if you're under a 20 million revenue business, you can sell a company with no capital gains as long as you've held that stock for 5 years. So
QSBS.
If you have a C Corp, it's so they kind of align in a way. Like you're forced to do a C Corp with ROBS, and then this law has a avenue to get capital gains at no tax liability for C Corps. So I think they kind of go together. And so if anybody is considering the ROBS, it's probably worth looking into, because I've had, again, we're talking you have to own the business for 5 years. I wasn't even a deciding factor in making my decision with the ROBS, but it came up after the fact, and I think it has some positive opportunities in the future.
Yeah, no, it's a huge benefit. And am I right that we're talking about the same thing?
Small business qualified stock, SBQS.
Yeah, and why do I know it as the acronym or the abbreviation is
the acronym could be wrong.
QSBS, Qualified Small Business Stock.
Okay.
Yeah, we're talking about the same thing.
Yeah.
QSBS. Yeah, great. It is a big benefit. I don't fully understand it yet, but from everything that I hear about it, it's actually an enormous benefit. The idea that you could not pay capital gains on a multi-million-dollar transaction itself represents millions of dollars.
Well, and this is, the crux of my financial, I have a financial background, so I have most of it in my 401k, and I have a little tag personally. So the once I pay off the loan, my goal is to then retire the stock. So I'm basically, we'll start, instead of paying a loan, I'm going to buy back the 401k stock. Well, so I have a $4 million business, $400,000 from the 401k. Well, when I pay off the loan, that $400,000 is now worth $4 million. Revalue the company. Then I start paying the earnings to redeem the stock. So basically, I put $4 million into the 401k. Now that's tax free, and then I own the company personally, 100% because I've redeemed all of the 401k, and then can sell that without a taxable event. So I have not consulted a tax lawyer, but I imagine that this is the path that I'm exploring, and I found it to be a very interesting path.
And so just to distill that, you think that you can basically go through effectively a sale of the business twice, both times tax-free.
Well, the first one isn't a sale of the business, it's a redemption of the 401k. But because it's highly levered, so if you think of the balance sheet as a $3.5 million loan, $400,000 in 401k, $100,000 in personal. So when you just pay off the loan, right, with the earnings from the business, then you have, let's just say there's the same value company. You have a $4 million business where not, that 90, so a 3.6 million is the value of the 401k stock, and then the rest is personally owned. And so then I go through another revaluation to revalue the stock in anticipation of buying it back using the earnings of the business.
Right. And so then you buy it back, and because it's in the 401k, it's tax free.
Right. Exactly.
And then if you, Jan, personally own the business as opposed to the 401k owning the business. And so if you then at your retirement exit the business personally, that's what I was kind of...
Right, as long as I don't grow, the worst case scenario would be I grow it so there's more than 20 million in revenue and it's no longer qualified small business stock. Yeah. So that's the worst case scenario. Now, again, I just want to say, this is me personally reading the law and doing my research. I'm sure there's some lawyer out there being like, you can't do that, but you never know. So
yeah, do your own research, everybody. All right, Jan, close us out with this very, as I said, very fortunate SEO project of yours.
Yeah. Well, I mean, so again, there's always been referral business that has come in, but I basically, that 2024 was a combination of transition with the business, election year, which I didn't know was a thing, but apparently everybody in construction knows that election years create uncertainty, and it kind of it kind of puts a drag on the business. I've talked to like my window suppliers and my lumber suppliers, and they all say election years are a slow time. And so, and it was a slow time. And when it was slow, obviously I'm the owner. I got to fix the problem. This is, focus my eyes on it. So spent a whole bunch of money on marketing, did some sort of print advertising, mailers. We did some, go on to house.com. We've always had a presence on house.com, but you can pay for lead generation. And then I started talking to, one other thing you'll learn when you become a business owner is you get calls from a million different people, solicitations. But you got a lot of
who
calls.
want to buy your business.
Well,
those searchers
who want to sell you products and services. So
Right.
I get a lot of SEO calls because I guess they, so the great thing, we had a great website. We had hundreds of projects. We had beautiful pictures professionally taken. No words, no taglines, no keywords. So if you went on to and you Googled like Atlanta basement remodel, we were on page 14. So all of the business was becoming either word of mouth. My Google Console analytics would say like 98% of people found you by Googling Victoria Renovations. So it's like, okay, like the only way that you found me with Google is if you already knew who I was, basically, is what it was saying.
Right.
So I did kind of contract with, there was a company that I eventually said, okay, let me give it a shot. Spent like $1,000, did like, 6 weeks of weekly meetings with them. And when they told me that, like, okay, if you, in 9 months, I got to pay you this money. And 9 months later, in one, like, Sandy Springs bathrooms, we can get you into the top 3 pages. And I'm like, I can't afford, and I needed to move faster than that. And so, luckily I had somebody through my network who wasn't a friend of a friend who'd done SEO. He spent 2 hours with me. He just said, I'm going to record this. And you just do what I say you're going to do. And basically, talked about going onto each page, putting on the keyword search, using an AI plugin to kind of auto tag the pictures. I got Chat GPT, and I basically, everybody knows it's amazing, but I put in the contract, I put in the pictures. I would then have a prompt, and it wrote me. Everybody can go to VictoriaRenovations.com. You can look at my Chat GPT project summaries. And I just started like going through the hundreds of projects and started to optimize it for the Google search. And there's Google paid search, which is the sponsored, but this is all free. It's just your time and effort. And honestly, like, so that it just, I didn't even finish it. I got 1/3 through updating the website, and then I got too busy because of all the business that we had to finish it. So
you got too busy because it works so well.
It works.
All these new leads from Google were coming in.
Well, also it was post-election, but there are a lot. I always ask every prospect. I take every prospect call and I set up the initial meeting, and I ask every prospect, okay, where did you hear about us? And I would say prior to doing the SEO was very limited on Google. Mostly probably location based, because you're kind of in the same area. But I would say probably like 25% of to 33% of our leads are now coming from Google. And it causes its own problems because we actually have had to expand our geographic area a little bit because the Google obviously is hitting it. It's hitting people from, a little further outside, like the referral window. But it's been amazingly effective. It was only my time and effort. It is a little daunting to learn how to do SEO. We use WordPress, which is this sort of UI for the website. But I'm an owner. I learned it. I can go into the back end and I can update, and then I can see. I was gonna be sitting on my couch at night, like Googling Sandy Springs basement remodel every day to see like what page I was on until I got up to the first or second page. So
amazing. And by the way, have you finished the other 2/3?
No.
Wow.
No.
Okay.
I haven't had a chance. I did this all last summer, and we've been too busy since. So, anyway.
Well, that would be hop on Upwork, Jan. If it really was generated that much for you that quickly.
Well, I'll
you want to have
we have more business than we can handle at this point. So, but yeah,
great, Jan. Anything else? Anything we didn't hit?
No. Just in spite of the challenges, I do wake up every day energized in the business. Like everything that all the rosiness that I kind of went into the transaction with has come true. I'm excited about like learning the new business. Business is doing well. Like the skills that I've learned in corporate America as it comes to managing people or dealing with, just getting through the problems has served me well. But it just took a little bit longer to get there, and the challenges are pretty steep. And, I would say that the good news is I was always a hard worker, but like, I don't think you buy a business and, in order to work less. So
you mean it's not passive?
It's not passive. It is not passive. So it's the good and the bad. If
people want to reach out, LinkedIn work. And why don't you plug the URL, victoriarenovations.com? Is it that simple?
victoriarenovations.com. Yep. There is a contact us page that goes directly to me. You could also, I believe my phone number is on there as well. So feel free to text. I don't know. We'll see what that turns into.
Careful.
But yeah, I'm happy. I'm happy to, it's kind of a community of people who are interested in this, and I'm happy to share my experience with potential, with potential future entrepreneurs.
No, appreciate the offer, Jan, and appreciate you coming on and sharing about your experience. Congratulations on these last 21 months.
All right,
difficult, but love the point that you closed with, that you wake up energized, and it's taken a little bit longer, but it is where you wanted to go.
It is.
Hope you enjoyed that interview. Don't forget to subscribe to the Acquiring Minds newsletter. We send an email for every episode with an introduction to the interview, a link to the video version on YouTube, and soon, key takeaways, numbers, and more essentials from the interview for those of you who don't have time to listen or watch it. Subscribe at acquiringminds.co. You'll also find all our webinars there on the website, both those we have coming up and recordings of past webinars. At this point, there are over 30 webinar recordings, a wealth of information on all the technical nitty-gritty of buying a business. acquiringminds.co.